Rightmove, which reported today, and immediately today being Friday, the only day that is available for us to record this, down initially began by being down 24% out of the gate very briefly, which is a huge move for a FTSE 100 company. It was his biggest one-day decline, I think, pretty much on record. It recovered then to be down about 12% by the end of the day, which is still a fair bit. They've launched their Q3 trading update, and the trading update is what it is. It's a trading update. Mostly an update and list of stuff that they've got going on, but they've also issued their guidance for the rest of the year, which is sort of 3 months towards December, and all of next year as well. And the market wasn't very pleased by, well, something. Let's take a bit of a look. So in terms of that guidance, then they list a few things that they've been up to over the last, the year and the quarter. They're working on various things to rebooting their app, building AI search in, fitting AI interfaces. A lot of AI talk here is going to come through. AI interfaces for their back end to make them more efficient. They're busy doing a load of R&D into two of their services, which are rental operators, which is basically helping people connect with a kind of largish rental base, and Agent Accelerator, which is helping startup agencies be also locked into the Rightmove kind of ecosystem. In terms of what they actually expect this to turn into, cash-wise, revenue-wise, they're looking at 9% revenue growth for the year, which is pretty much bang in the middle of what they were guiding for before, somewhere between 8 and 10, so that's all on track. Operating margin from there is 70%, which is also pretty much bang on track. 2026, looking forward, they're looking for, again, the same range, this time of 8 to 10% revenue growth, and operating profit growth of between 3 and 5%. And that's, I guess, something that immediately might catch the market's attention. I'm not sure it's enough to kind of spook the market per se. The reason being, they're investing heavy into AI stuff. They're busy they say it's central to everything they do. I don't think it is at the moment, but they're busy trying to spend money to make it be that way. And while they're busy spending money like that, margins are going to be lower. And that's they're hoping this will carry on for a couple of years, actually, through to about 2028 of this kind of much more steady operating profit growth. And certainly at the start of the day, it was trading at a multiple where if you thought 5% top end operating profit growth is going to be your norm for a while, you might reconsider whether you thought this was well priced. But they're thinking this will pick up to about 12% by the time 2030 comes around. So, we're in an invest phase. We've seen this from various companies before. I'm not sure we've hugely seen it from Rightmove before. They tend to be a fairly mechanical operation. They've done a good job of establishing a big competitive position with a two-sided network effect protecting their business. And they have largely just sat there and watched people try and fail to compete with them. It looks as though one of the things kind of concerning the market is some sort of speculation at the moment around the question of what AI means for this company. So partly they're spending on it, but whether AI might change the competitive landscape in some ways. And one way in which you've sort of heard this been mentioned is the idea of kind of agentic search in the property market, kind of disintermediating Rightmove effectively. So if you can just search in ChatGPT for houses in your area that you like the look of and they're in your sort of price range and so on, if it can just scrape it off a website directly, i.e. the estate agent's website, what do you need Rightmove for? And Rightmove makes a lot of money in some ways, and I mean this is a positive thing about the business, it makes a lot of money for doing not an awful lot. It mostly just aggregates stuff and then charges people for listing in the place where all the stuff is. And that's much, much easier said than done, but it's not a hugely complicated business in this kind of way. And they're doing various things to try and make sure that they remain the place. Could they be bypassed by AI? I mean, I'll tell you, my short answer for this is I don't think so. I think this will be a lot harder to bypass. So there's a big theme going around at the moment of AI destroys software companies. And the main reason for that, from what I can see of it, is new AI stuff can write code. It can write software code. So if your thing was, we can write software code, that's probably not really your thing anymore. You need some other kind of barrier to entry and something else that's going to make you different from all the other code writing things. And I guess the observation here is that Rightmove has always been in a position where it's had plenty of things trying to compete with it. It's not actually that hard to set up a property platform website. It's not, I don't think, a regulated industry in any meaningful way. You can go set up a website if you like and ask a load of estate agents to list there and pay on it and see if any buyers show up and have at it. The trouble is they don't, because if you haven't got any buyers looking at your site, no one wants to list there. And if no one wants to list there, no buyers want to look at these things. So it's tough to get started here. By contrast, if you do have both of those things, or one of those things, you get the other one quite easily. If you have loads of properties, people look. And if people look, more properties show up. And then more people look. And then more properties, and so on and so forth. And this is basically how Rightmove has left other things in the dust. It's not really got much in the way of patented tech or anything like that, as far as I can see. But it's not just, we can build a website in which you can list properties on. Because lots of things can do that. That wasn't really a barrier to entry before. You could probably do one on GoDaddy or something like that. So my sense is that there's been a few things that could disintermediate Rightmove from now. I remember having a conversation with ISA investor a little while ago now, who sort of pointed out that if they really wanted to, and I think he meant this as a kind of risk factor for Rightmove, you could start listing all the houses on Facebook Marketplace if you want. There's loads of people there. And you could try and connect buyers and sellers through that, where there's already people looking about. I think the fact that they've managed to avoid that happening probably speaks to Rightmove as a strength. Rightmove is, whether you like it or not, the place people go to look for houses. They don't look on ChatGPT. I think that will make them harder to disintermediate, and it'll be harder to get people into the habit of looking for houses to buy through ChatGPT, even if it could work quite well, even if they could do smart AI stuff. If Rightmove can keep pace with them on AI and integrating AI into its search, I think I like their chances. So cards on table here. I think this dip is definitely a case for looking closer from a buying perspective. I've been cautious around Rightmove before, actually. I was actually more worried about the CoStar on the market thing, because CoStar is a big competitor, has a lot of money, and they know what they're doing in this area. We think Rightmove's tough, but they are big and established and not fools, and not just starting from scratch on this kind of thing. They appear to have weathered that storm pretty well, but I am not convinced I see a huge disruption here, for the reason being that Rightmove's moat isn't just that it has a website. Basically, it has the website, and I think that makes it difficult to copy. What did you think here, Steve?
Well, my original thought was CoStar bollocksed it, really, because they, instead of buying on the market and investing billions of pounds competing with Rightmove, they should have just used the money to buy Rightmove. There really was no reason to do what they did. It was really, really poor. It was almost like they'd never, ever spoke to anybody in the UK about the property market, because nobody uses on the market. It's rubbish. Nobody has that app. It's just not a thing. And Rightmove, really, I think, is just an API away from being hooked into these, Gemini and ChatGPT agentic searches. I think if they use the API to go and find the properties and scrape the data and brought it back, and if they want to present it in their own window, they can, or if they just want to put some links up for you to go to Rightmove and look at it, the vast majority of the people using those services in the UK will probably have Rightmove installed. So yeah, not a worry at all, really, I think, in my head, for agentic AI. And I don't think the estate agents really want to go building websites with huge databases full of stuff. I think they'll probably find that being able to upload something to Rightmove is preferable, because it's all standardized and easy to do, and it works. And if there's a technological problem with it, Rightmove sorts it, and they don't have to. It's probably the best thing that the estate agents have outsourced for a while. They can grumble about how much it costs, but it's hard to disagree with how effective Rightmove has been. As you said, Steve, this is why you like to buy businesses with moats, and Rightmove has what appears to be a very strong network effect, two-sided as well. So I think that's going to continue, really. Onto the report itself, it was largely fine, Steve. I thought this was pretty much what we come to expect from Rightmove. I think there's a little bit in there that hints that the UK market is somewhat muted, But interesting that they said that's actually available listings were at a 10-year high on Rightmove, which might indicate that there's perhaps a lack of buyers in the market, or especially the kind of buying power. They said that the rental prices are also going up as well, but that's actually driven by lower supply and also some cooling of tenant demand recently as well, which might bring those prices back down a little bit. But I think generally what spooked the market, Steve, was this investment into AI, operating profit down to about 3.5%. I think we expect double-digit growth from Rightmove because they've been doing that for a very long term in terms of their operational profitability. And it is a high margin software business. Is a very high margin software business, and I think they had the whole report had that kind of, I'm going to call it the why factor, I guess I would call it, and it's like, do we need this? I'm not sure. I guess why you're doing it is future proofing, but then also why is it taking you until 2030 to really see some long term benefits from it? That's seems to me like that's a little bit slow. Headcount was up as well on the last time we got it by about 14%, which is obviously going to have a bit of a smack to operating profitability. Headcount was at about 900, but 60% of those new hires, so there's a good couple of teams in that, was people in technology and AI. So look, they're focusing on that. They're focusing on this build out of this this product, this new idea, this reboot of the app or whatever you want to call it. And I guess if you was not complaining about it, you would say they're future proofing. And I mean, that's all you can really ask for as an investor in the face of the threats that are there from on the market, which is obviously going to waste some money trying to catch up with them. And also the threat that agentic AI might not like what Rightmove is offering and may build something itself. Rightmove has to compete because if it rested on its laurels, it could end up falling behind. And that is one way to lose your market share, as we've seen with people like Intel. I suppose is a lazy comparison. If you just start dishing your cash out and you stop competing hard, you fall behind, and it can be very difficult to catch up, especially in very fast moving industries like software and in the face of competition, that is. So yeah, I same as you really, Steve. I mean, if it was still down the sort of like however much it fell like 20% straight off the bat. I think if it was still down 20% today, I'd be a lot more interested in it than I am now that I know it's worked its way back. It was still, I think, the top FTSE faller for the day. But a bit like you, Steve, I didn't see anything largely wrong with this or anything that would make me shy away massively, but I just don't think it's fallen quite enough for me to get really interested in it right now. So is this on your list of things to buy then?
Yeah, possibly. To be honest, I think at this level I do get interested in Rightmove. I also had a look, and I'm less interested in this one. But the company that's quite well, there are two companies that are quite like Rightmove, at least structurally in the FTSE one way or another. They are Auto Trader, which is kind of Rightmove for cars. That was down a bit today, but that wasn't trading at quite the same multiple beforehand anyway. And there's Baltic Classifieds, which was also down a bit, which is kind of Latvia, Lithuania, Poland, I think. A combination of their Rightmove and their Auto Trader and, Indeed, and several other things as well, I think. But they're all down, and I wonder whether the market's sort of seeing more here than I think there is. It's been a week of falling SaaS stocks, isn't it? So we've seen Axon go down. We're not talking about some of these. Axon down, DoorDash down. Salesforce falling a little bit. They didn't report, but I'm interested to see what's coming for this one. I think the moment I was having a chat with some of the other full writers who are generally much more bullish on this sector than I am. I think the kind of AI threat is real in at least some cases. And I think what we sort of get to is the idea that if your competitive advantage is just we can write software or we can write code, that is pretty much gone. If it's got something else to it, like we have and in all cases it includes we have a big kind of competitive position, or we're an incumbent and there are switching costs or something like that. There's a bit that goes on there, but then you need to start worrying about multiples, because if cheaper alternatives start showing up, your pricing power goes away. Um, it, I'm much more bullish on cases where I can see another form of a moat, and there's something along those lines coming. But a candidate that I'm not talking about this time, the one that went down quite a lot this week was Axon. They do have a different kind of a moat. They're vertically integrated into law enforcement in the US. Their products work with their body cams, so they make the hardware, they make the software. No one's pitching up with another app and saying, here you go, police people. See about using this. Their stuff is tethered to the hardware that they're making. So I think they're going to be really difficult to push away with AI here. I think there are lots of other reasons to dislike Axon and their report. They did some acquisitions funded on debt when they don't make less free cash than they pay out in stock-based comp, from what I can see. But that's a different worry to AI is coming to disrupt you sort of thing. So there are some like that I think the fears might be kind of more dramatic than they otherwise ought to be. But one of those examples is Rightmove, I think. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.